Have you ever thought about where your money goes when you invest in Bitcoin? Welcome to the fascinating world of cryptocurrency, where each decision could potentially transform your financial future. As we delve into the realm of Bitcoin, we will unravel the mystery of this digital currency, its relevance in today's economy, and why understanding its intricate workings is vital before making any investment moves. Let's dive into the world of Bitcoin and explore what it really means to invest in it. To understand why Bitcoin has become a popular investment, we need to go back to its origin. In the wake of the 2008 financial crisis, a mysterious entity known as Satoshi Nakamoto introduced the world to Bitcoin. Nakamoto, whose true identity remains unknown, outlined a new kind of digital currency in a white paper titled Bitcoin, a peer-to-peer electronic cash system. The idea behind Bitcoin was revolutionary. It was designed to be decentralized, meaning that no single institution or government controls it. Instead, Bitcoin transactions are validated by a network of computers across the globe, each one solving complex mathematical problems in a process known as mining. These miners are rewarded with new Bitcoins, a mechanism that not only validates transactions, but also produces new coins. Bitcoin's decentralized nature was a response to the perceived failures of the traditional banking system, where the actions of a few could negatively impact the many. With Bitcoin, the power was put back into the hands of the individual. Instead of relying on banks to secure and transfer our money, we could now do it ourselves, peer-to-peer, anywhere in the world, without the need for a middleman. Additionally, Bitcoin introduced the concept of a public ledger, known as the blockchain. This transparent record of transactions ensures that Bit cannot be duplicated or spent more than once, solving the double spend problem inherent in digital currencies. Furthermore, Bitcoin was designed with a finite supply of 21 million coins. This scarcity, combined with its innovative features, has led many to view Bitcoin as digital gold, a store of value in the digital age. But Bitcoin is more than just a digital currency. It's a technology, a protocol, a revolutionary financial system that has the potential to change the way we think about and use money. With that understanding of Bitcoin's inception, we can now delve deeper into its investment aspect. Now, why should someone consider putting their money into Bitcoin? Well, there are a few compelling reasons. First off, Bitcoin has demonstrated remarkable potential for high returns. Since its inception, Bitcoin has seen significant growth, often outperforming traditional investments. For instance, if you had invested just $100 in Bitcoin back in 2009, today, that investment would be worth millions. The potential for such exponential growth is one of the key factors that draw investors to Bitcoin. Secondly, the decentralized nature of Bitcoin is another major advantage. Unlike traditional currencies controlled by central banks, Bitcoin operates on a decentralized network known as blockchain. This means no government or financial institution has control over your Bitcoin. You are the sole owner of your digital wealth, and no one can freeze or seize your assets. This level of financial freedom is unprecedented and is one of the key innovations that Bitcoin brings to the table. Moreover, Bitcoin can serve as a hedge against inflation. Traditional currencies tend to lose their purchasing power over time due to inflation. However, Bitcoin, with its limited supply of 21 million coins, is designed to be deflationary. This means that the value of Bitcoin is likely to increase over time, especially when demand outstrips supply. As such, investing in Bitcoin can be a way to protect your wealth from eroding due to inflation. Additionally, Bitcoin is a global currency. It can be sent or received anywhere around the world at any time. No bank holidays, no borders, no bureaucracy. This makes Bitcoin a highly flexible and convenient investment asset. Finally, Bitcoin opens the door to the world of blockchain and cryptocurrencies. By investing in Bitcoin, you're not just buying a digital asset, you're buying a ticket to the future of finance, a world where digital currencies could play a key role. While these advantages paint an attractive picture, it's crucial to also be aware of the other side of the coin. As with any investment, Bitcoin comes with its own set of risks. First on the list is its infamous volatility. The price of Bitcoin can swing wildly in a matter of hours or even minutes. One day, you might be celebrating as your investment soars to new heights, and the next, you might be biting your nails as it takes a deep dive. This roller coaster ride is not for the faint of heart. It's like a high-stakes game of poker, where the stakes are your hard-earned money. Then there's the regulatory uncertainty. Governments around the world are grappling with how to deal with cryptocurrencies. Some have embraced them, while others have outright banned them. This regulatory roulette can have a massive impact on the value of Bitcoin. A single statement from a government official can send the price plummeting or skyrocketing. If you're not comfortable with this level of uncertainty, Bitcoin might not be the right investment for you. Next is the risk associated with digital wallets. These are where your Bitcoins are stored. But unlike a bank or a safe in your home, digital wallets can be vulnerable to hacks, technical glitches, or even simple human error. If a hacker gets access to your digital wallet, or if you lose your private key, your Bitcoin investment could vanish into thin air. And there's no insurance or safety net to catch you if that happens. Last but not least, Bitcoin transactions are irreversible. Once you've sent Bitcoin, there's no getting it back unless the recipient decides to send it back to you. This irreversible nature of Bitcoin transactions can leave you vulnerable to fraud and scams. So yes, Bitcoin can be an exciting and potentially lucrative investment, but it's not without its pitfalls. It's a bit like venturing into a wild jungle. It's thrilling, but it's also fraught with danger. It's essential to be well-equipped and well-informed before you step in. Knowing these risks is just as important as understanding the benefits when deciding whether to invest in Bitcoin. So, how can one navigate the ups and downs of Bitcoin investment? Well, the truth is, there's no one-size-fits-all answer to this question. However, there are strategies that can help mitigate some of the risks associated with Bitcoin's volatility. One such strategy is dollar-cost averaging. Dollar-cost averaging involves investing a fixed amount regularly, regardless of the price of Bitcoin. For instance, you could decide to invest $50 every week. When Bitcoin's price is high, your $50 will buy less Bitcoin, but when the price is low, the same $50 will buy more. This approach smooths out the effects of market fluctuations over the long term, allowing you to potentially lower the average cost per share over time. What's more, dollar-cost averaging is a strategy that encourages discipline and consistency. It's a long-term game, not a get-rich-quick scheme. It's about understanding that the value of Bitcoin may rise and fall, but over time, the hope and the belief is that it will rise. Another strategy is diversification. This involves spreading your investments across various assets to reduce risk. You don't have to put all your eggs in the Bitcoin basket. You can also invest in other cryptocurrencies, stocks, bonds, or real estate. Diversification can help balance out potential losses in one area with gains in another. And finally, do your homework. Stay informed about market trends and news. Understand the factors that cause Bitcoin to rise or fall. Knowledge is power, and the more you know, the better you can strategize. But remember, investing in Bitcoin, like all investments, involves risk. It's essential to only invest what you can afford to lose. And while these strategies can help, they do not guarantee profits. To wrap it up, investing in Bitcoin is not just about buying low and selling high. It's about having a strategy, being consistent, staying informed, and understanding the risks. Bitcoin investment is a journey, and like all journeys, it's best navigated with a roadmap. Remember, a well-informed investor is a successful investor. Investing in Bitcoin is not a decision to be taken lightly. As we've journeyed through the birth of Bitcoin, its advantages and disadvantages, and investment strategies, we've underscored this point time and time again. We started by understanding why Bitcoin was invented, a revolutionary digital currency that operates independently of a central bank. It's a concept that broke the mold, offering a new perspective on financial freedom and control. We then delved into the pros of investing in Bitcoin, its potential for high returns, its scarcity value, and the fact that it's open to everyone. These are compelling reasons that continue to attract many to this digital asset. However, we also highlighted the cons: the market volatility, regulatory risks, and the fact that digital currencies are still a relatively new and evolving field. These are sobering realities that every investor must grapple with. We also discuss the importance of having a strategy, whether it's investing a steady amount regularly to average out the costs or waiting for the opportune moment to buy. Knowing your game plan is crucial. To summarize, Bitcoin investment, like any other, carries both potential rewards and risks. It's a venture that requires a clear understanding, a well-thought-out strategy, and above all, a recognition of one's financial standing. Ultimately, the decision to invest in Bitcoin should be based on thorough research and consideration of your individual financial circumstances. It's not about jumping on a bandwagon, but about making an informed and conscious choice. So, equip yourself with knowledge and tread wisely.